volatility hit the roof in February. Several exchange-traded products in the volatility space essentially blew up. Are you satisfied that leveraged and inverse ETFs and volatility products don't constitute any kind of systemic risk to the system?
So let me take a step back and speak generally. I am always on the lookout for risks that we don't recognize or risks that we have misassessed. Whether it's in a product space or another space. I'm not going to comment on specific products, but I come to work every day asking our staff, are there pockets of risk that we're not recognizing or that when we look at them, we're way underestimating? And leverage, as you and I both know, leverage that you don't see or leverage that's excessive has been a hallmark of problems for a long time.
One of the areas that we spend a lot of time on is IPOs. I've been covering them for 20 years. It's been very depressing to see the IPO market slowly go down. I think the IPO market's 50% lower than it was 20 years ago. There's 3,400 companies in the Wilshire 5,000. That is a disgraceful number. You've been very passionate.
That's a 10b-5 violation.
You have been very passionate about how to change that. Give us some insight into what we can do to get more companies to go public.
So I am passionate about it because if this is our total equity investment space, the private part of it used to be this size. It's probably now this size. So half of our equity investment space is now private, which means it's away from our Main Street investors. I don't like that as a result, as a general policy matter, because we're shrinking the opportunities for our Main Street investors. There are a lot of drivers of it. We're looking at those drivers. Some point to regulation, some point to the availability of private capital, some point to secondary trading. It's probably all of those, but like you, Bob, I would like to see the suite of opportunities for our Main Street investors be very broad.
Let me move on. I'm going to hit you with several questions on different.
So he kind of did an okay job of addressing this, but let me be clear. The reason why this is happening, and like I said, feel free to leave a comment if you think I'm wrong, but it's because of monopolies and consolidation of power. Big companies now have so much power, have so much ability to just buy out smaller parties that there's no reason for these companies to go public. First off, there's huge fees, and this is one reason why I think there's a lot of value in cryptocurrencies and ICOs instead of IPOs, because IPOs are very, very expensive, and you have to pay all this money to giant leeches like Goldman Sachs and banks to go public, and then you have to deal with all this other pressure, and it forces the company to think short term because everything is quarterly instead of thinking of a 5-year or 10-year plan. So that's why a lot of companies, and a great example is Uber and Airbnb, they're not going to go public anytime soon because they don't want to deal A, with giving a bunch of their money up to banks, B, dealing with having to now answer to shareholders and worry about short term instead of long term. But the biggest problem why is most of these companies that would consider going public, they just get bought out because all of our major corporations, they're just sitting on tons of cash, and they don't really need to innovate. They don't really want to increase wages. They just go and buy competition and keep their monopoly going. So it's a major problem, and like I said, I could be wrong. Give me your comments, give me your opinions, but that's why I do really believe in ICOs that do not have as much regulation, and unfortunately, it is unfortunate. People are going to lose their money, people are going to get scammed, but look what's happening to IPOs. No one wants to do it because of the cost, the regulations, the being forced to answer to shareholders and think short term instead of long term. And at the end of the day, because our government has allowed these other companies to become so profitable monopolies like Facebook, Google, Amazon, everyone wants to just get bought out. Like, what's the point of going public when you can just get bought out and then just chill? And that's why it's going to continue to shrink. It's funny that it's now 50% private, 50% public. It's going to continue to shrink, and the only publicly traded companies are going to just be the giant tech monopolies or whatever other monopolies that we have. So let me know what you guys think. Like I said, I'm for the free market, and that's why I love crypto. We need less regulation. We need more open ability. And like I said, I mean, obviously there's scams, and the SEC should get involved, and people in our community should try to self-regulate. But a dumb investor is going to get scammed whether it's regulated or not. And the best example is Broadcom. What's it called? Enron, Riot Blockchain. So it doesn't matter what kind of regulations you do, there's always people that are going to get scammed. But the problem that you're doing is you're killing innovation, and you're basically allowing monopolies to just get bigger and bigger and just buy everyone out. So let me know what you guys think about this, and I will talk to you guys soon.